Happy Friday. Good morning. So, buying the dip continues. How long will it continue? Oh, one of the things we always do is have prices reached their destination, and across the board, they're almost there. So, once they do, can they get through it? Now, a lot of times things do what we call 100% greater than 100% retracement. So, starting with SPY here, you see this little room. And this is, I put the red line here, is basically the cluster of these bars right here um, on a closing basis. And you can see across here going back into last year, it's about the same area. There's a little breakout that it looked like it was going to go higher and came all the way back in. And we got this bottoming process that's been going on. And I drew this a little while ago, head and shoulders kind of a bottom. And whenever we look at that, the question is, well, can it break through what's called the neckline, the resistance area? It might do that. It might, but based on this continuation move, uh, Fed next week, whatever everybody thinks, quarter point, so on and so forth, maybe that's out of the way, and the market goes up on that, and maybe some type of corrective process will begin. We always look at our internals, which sentiment is coming back up into the bands. You see it just touched that where we got that little down dip. And notice that breadth has been deteriorating, which typically happens as prices start to move up and we reach destination where fewer stocks are participating on the move. So it's a heads up. It's like, don't get enamored by this move higher. Don't get caught, buying breakouts and so on. So caution flag is beginning to rise. It's not totally up, kind of waving there, the yellow flag again. And we reach that resistance area. We want to be aware and expectations in line, even if it breaks above that area. I think that's something that we want as a possibility. As we look around, and I'm going through the ETFs here rather than the futures. The Dow had that bigger move down into major support. It's working its way back up. This M top never triggered by trading below the prior bar's low here. So it's just trading inside so far. The transports up against their resistance area. So far, it's holding up there. So we consider bullish price action. Maybe they're going to be able to push up through there. We'll see. Getting more and more markets into resistance. That was my next one to look at. IWM. Right up into the same area. Nice move off of the low, of course. I got my little alert up there. It's up into all those pivot highs. And many times, as things move up, they break above. And so greater than 100% retracement. And that is one of our concepts that after a greater than 100% retracement, momentum typically stalls. And that's all it means. It doesn't mean it's going to collapse, but it's something that is pretty typical, that after a greater than 100% retracement, right, just kind of common sense, it went from a low point above a high point, gets above there, momentum begins to stall, and some corrective process begins. And with sentiment reaching an extreme to say, be careful, that's the message as we go into that, yesterday, they bought the dip into the gap fill. It is a bullish trend. It started with the gap up, and then, it came down to a level where buyers were comfortable to step in, and then went all the way back up to the high. And so NASDAQ 100 Qs coming up into the same area. So across the board, we pretty much got the same message that, even if it takes out the high, buying the dip probably isn't going to work the next time. Yes, so Steve, all of this, markets, he was saying a healthy pullback, sure. And markets don't go up forever. We all know that. And once this gets a pullback, we'll see how far it pulls back and we'll go through the whole process again. Does it hold support? Where does it hold support? What's the price action? What do the internals say? But everything that's happened here in the beginning of the year that started in the stronger stocks at the end of December. And so the end of December, that last week of December, the strongest ones began to lead the way higher. And semiconductors, which is great, intermediate term, that technology led the way up. And as more earnings reports come out, we'll see what the action is to them. So far, everything's been pretty good. Intel, that was a laggard, and that's down this morning. So that might be one of the heads up that, with tech, we got to, with everything else, sentiment, resistance, the time's getting closer to be a bit more cautious or less aggressive. All right, so where are things right now? Just pre-market anyway, a mess. Just looking at overnight what's going on here. A little bit of a gap down, and a minor gap down like this typically is going to get bought, especially after a day like that. So there's nothing that's going on pre-market as far as SPY that says anything of significance is going to happen here. And there was that inflation number, and it's like no big deal. I guess institutions figure they know everything they need to know, feel on solid ground about the quarter point. So confidence is rising. And maybe today they were a bit more aggressive, and they push this up toward the highs there, where there's going to be more sellers. Just look to the left, and it's just the way it is. The good part is, as looking at, it's good and bad, meaning prior to going up there, there's all this congestion that went on. That was the dip down, and it came back up. So what's good is that as it's gone up, it had this back and forth, which created a support area. So rather than, a situation where things go straight up and they create a void, and then when they begin to turn, there's nothing to stop them from going down. This is highly unlikely that when it starts to correct, it'll collapse, unless there's some surprise, right? Like the Fed does 50 basis points, and then maybe, everybody gets a little schizo. But under normal conditions, this kind of price action is going to provide a floor under the market on a pullback or whatever stock you might be looking at. And so no biggie about what's going on in the middle of yesterday's range, a little minor gap down. S&Ps, there's that big dip and the move up. They're coming up into the resistance, of course, and a little gap down. Now, as I'm looking at this, and of course, we got the whole day to go by. But, when I look at this and I think, if this was the end of the day and I saw that picture, a wide range bar and a little baby inside bar, I'm going to be thinking breakout bar failure, which is a typical pattern that I've seen happen over a few decades, where it breaks out, there's a little consolidation, it breaks out, there's an inside bar, and it breaks the low. Especially near resistance, it's a message to get out short term. So we'll see where this ends. Right now, let's just look at the mess that's going on here. And so it's like it's gaining its footing, and we'll see where this ends the day. Again, up near resistance, SPX. This was yesterday, never even got there, so that was all good. And there wasn't a lot of premium, but it's even a little less now. I'd like to be above 4,100. I mean, 4,100, I think, is probably okay at that resistance, but there was a little more premium before at 4,105, just a little extra you know, comfort level, but I don't think it'll go through 4,100. And that, of course, is going to be a big level. And on the downside, 4,000, but I don't think there's any juice below that. Yeah, there is 3980. Yeah, yeah, yeah. So you want to be below that, and 3980, I think could be I think, hey, looking at the chart, that should be a no-brainer. All right, 3975 has good juice, McGraw's telling me. So, McGraw, as you know what I'm thinking, as you're saying that now, and I'm looking at what it is, 65 by 70, right? 60 by 70. Going back, I think a year or maybe a little longer ago, we would look at those numbers, and that would be where we would look. Whereas as things have evolved, I guess over the last year or several months, it has been more premium that we've been able to get. Like 3980 is 80 by 90 cents, which is still good. And I see where you're looking. I think it seems to me you're getting a little bit more cautious the way things used to be, getting a little further away and wider spreads. Hear how you manage those trades when you. Okay, all right. But McGraw, let me know what day, maybe one day next week at lunchtime, that we could do the SPX thing. You can email me, let me know, other than Wednesday, MT Live. And this way, we can stream it so everybody on YouTube will be able to watch as well. Okay. So Qs are down here a little bit, no big deal. Intel earnings, 200 MA resistance. The theme's going to be the same no matter where we look. And it's not always that way where, all of these indices look the same. There was some time ago, I don't remember how long, a lot of times they went in different directions. But constructive things have gone on, of course. And, getting above all of the moving averages. And you'll notice that a lot of the indices, the moving averages are clustered all together like that. And so you'd want to, when you look at that, I know years ago, you used to go, that's a more significant area of support or resistance. Well, not necessarily so, unless they line up like this does with this pivot low here, which is always comes back to the support area. But you'll notice that a lot of these charts line up where these moving averages are all clustered together in that way. And Bitcoin is up against its 200. It's hanging up there. So and they're hanging up there, which is creating this area. So when we see it's not at the pivots yet, but as it goes sideways here and you see the way it's extended, that buyers are still aggressive. So if it breaks below this low, you see where I put my little alert there, it's going to bring in a bunch of sellers. So, and right now it's just real tight up there. So far, that's bullish price action. It suggests higher, but if it breaks to low, it's going to bring in some selling. Interest rates just hanging here. We've been talking about this for a while, this potential W bottom, and it's beginning to take shape at this low. And it's the caution, the caution flag. Things are up at resistance, and we look at intermarket relationships as well as our sentiment and breadth. And so this retest pattern, that begins to move up. Markets didn't like that. That's going to be in alignment with markets at resistance and some selling coming into the market, as well as our internals. The dollar, pretty much the same story. We've been talking about it being here at this major support level. It's just been hanging there. Got my alert if it starts to poke up. And alignment of multiple pieces of information coming together that tell us, hey, be cautious, be bullish, be bearish. look for relative strength and weakness, creating opportunities. Quickly here, gold continues to move up, but it won't if that dollar breaks out above those highs. And this is coming up toward this resistance area. It cleared this one. So as it gets closer to the next one, you want to watch the dollar. All right. And crude oil. We talked about the bottom, making a bottom here. Looks like it's going to break out, which is good for oil stocks and so on. And we looked at transports, and so that's it. Happy Friday. And we'll talk next week. One of those on the chat room will be talking shortly. All yours, Dan.
Good morning. Yeah, let's see if we can find some 0 DTE trades. We haven't done any in a while, actually. Should be getting more now with earnings season. So let's see, where do we want to start? Intel, disaster gap down, bringing down semis. So we actually on this breakout with the bullish weekly and monthly, we sold the $26 puts with the intent of taking assignment. So that's still the deal. We'll sit through it. We sold them for like 76 cents. And I'm curious what those are going to be priced at the open. 76 cents with, over $1 it's still juicy, right? It's still over 3% of the strike price for 3 weeks. So I have a feeling we're still going to have an open profit on those at the open. And I sold some 27s myself last night. So that's going to be against me at the open. But AMD is down. That could be a day trade short, and also 0 DTE call spread. SMH has had a beautiful close, and now it's gapping to the bottom. So that if we close near yesterday's low, then that's a breakout failure. Just a different flavor of the one Greg talked about. Stag, someone in the green room mentioned this yesterday, bullish daily, weekly, monthly. A great example of multiple time frame alignment. Let me set the alarm at 3560. And last Wednesday, MT Live was on multiple time frames, so that's right out of that course. They're all in alignment. And Alex posted a chart saying natural gas all-time lows, and that he's talking about the crude oil, which is under $3 now. This is the ETF, and that's how ETF funds have to trade the futures to come up with this instrument for people to trade. And so they have different characteristics because of the rolling of the futures, the contango kind of thing. But the contango is totally different than the contango on the VIX, because the VIX, like by nature, is further time you go out, the higher price it is. You pay for uncertainty. Whereas the futures in natural gas and oil is based on what does the spot market think it's going to be in the future. And so if the spot market thinks that natural gas is going to be the same or lower, then you won't have this contango problem. MRO, beautiful code. This is just a gorgeous inverse head and shoulders. You got this big multi-week breakdown, deep retracement, doesn't have to be 100, but deep retracement. It did break out, pull back, closing breakout. That looks great. Obviously we got to keep an eye on the oil ETFs. GIF, not GIF, GIS, I guess had an alarm go off. Alex, this was yours. You were watching for a turn here at the 200. So we'll come back to that. SPG was on our list from yesterday. Nice bullish sideways action. This is also an inverse head and shoulders. You got your left shoulder, head, snap right back, going sideways, bullish weekly. SPG looks great. C turn, yeah, I like it. It's light volume, but daily, weekly, monthly, all in alignment. Looks great. I like it. Put that on the list. BuzzFeed, something was up with that yesterday. Look at that volume igniting. I don't know, I would never swing that, but it could be a nice day trade. Look, this was a beautiful buy setup. I'm into the close. This is igniting, controlled pullback into the 20. Now it's gapping over it. Wilk has been on our list for a couple days. Nice closing breakout. Target, deep retracement, sideways, gap, closing breakout. I know it's at the 200, but I don't, with this consolidation at resistance, it doesn't mean anything to me. So that has a void target. This BBBY, we stopped that up break even yesterday, and you know and today it's more in the news. Obviously, the journal says that J.P. Morgan has called them in default, but you know, it's still up 5 cents. So when I saw those headlines, I didn't know where it would open, but nothing to do with it. AX, bullish price action. I don't like the overlapping bars. I have enough to watch. MATW, bullish all time frames. Will light volume, but we'll come back to it. Hasbro, another company laying off 10-15% of its staff. You know, these like, there was an article actually in today's journal. I didn't read it because I don't care, but it was kind of like finally a summary of all the companies that have done mass layoffs. Wow, what's happening to Meta right now? Look at Meta popping his head. Wow, and we had that as a directional in last weekend's letter. Directional and put spread. We left some money on the table on that. Wow. But that it's 99%. That's news. I don't know what's going on. You don't get a wide range bar like that when everything else is doing nothing. RHI, bearish gap. That could be a call spread candidate. Chewy got an upgrade. This actually looks real yesterday. This thing rallied into the open and then just got killed right back. But spread idea, hold Chewy. RHI. I didn't give any official trades yesterday, Austin, but I did a few myself. And yes, I did RHI 7570. So yes, I'm in it. I'm in Intel. I'm in, I did this FICO, and I can't tell where it's going to open. I did the 510s on FICO myself, $135 away. I'll tell you, I'll tell you when the market opens if I'm happy or sad. All right, so yeah, so then yeah, I'll watch RHI with you. What, you know, I'll watch it like I do every trade. But let's consider legging into a condor. Well, I don't know. Let's come back to it. I need to let it trade for 5-10 minutes. Corning here is a little bull flag, rectangle kind of thing, bullish weekly. And 5, closing breakout. You know, but as I said yesterday, and Greg made it pretty darn clear today about the yellow flag and, you know, some of these patterns, I'll take, of course, but there's a lot of other patterns that I say, well, I think you're going to need the horsepower of the broader markets to make this go. And those are the ones that I'm going to hold off on until our KNX, my alarm just went off. So this was a pattern earnings that I said yesterday. Big bottoming tail traded under 3 bars lows, closing at the high. I said over yesterday's high, that could be a breakout daily, weekly. So let's keep an eye on that. I'll put him right here, KNX. These are all earnings. Let me start at the top here. CLAC. Now, if CLAC opened relatively flat, this was a beautiful long, another multiple time frame, daily, weekly, monthly, and alignment. But now it's gapping down here, you know, to the 20 MA. And it had earnings too, and I have no idea what their earnings are, but you know, obviously it's also, I'm getting whacked a little bit with the Intel news is what I'm guessing. But I'm guessing, I have no idea. AJG, nah, it's up 6 bars at resistance. So no interest in that. LHX, bottoming pattern, gapped up, no interest unless the put spread. Whiskey Yankee, it's up at red. So, well, it's opening flat, but you obviously had bullish sentiment there going into earnings with them not caring about holding. OLN had earnings. I posted this. Let's wait 5 minutes. This was a closing breakout. So let's just wait 5 minutes. Oh, here's my FICO. All right. It's a light volume, and it's going to be spready as can be. But let me see where they're at now, just for the fun of it. So yeah, it is gapping down a little, but nowhere near. They're not even open yet. The option market's not even open. Markets are perking here, you know, out of the gates. This KNX that I said. All right, see that now? It gapped too much. Gapped too much, KNX. This RHI. All right, see, you got to look at a level 1 to see where the true price is. RHI 78 by 80. Okay, so at least it's not gapping down to 76.